welcome back to the channel. So we're mixing it up a little bit. We're doing a trading outlook for next week. So this is GBP, USD. Just a future trading outlook for next week and seeing where price is going to go. So to start off, yes, there's a ton of lines on my chart, right? These aren't just random lines. These aren't just random lines going vertically across and horizontally across. Okay. So here, right, we have our horizontal line going down here, right? Horizontal, horizontal. So these are trading ranges. So I trade with ranges because these ranges indicate a certain time where price moves. And as you can see here on my right side here, I have my 12 AMs. So these are my 12 AM zones. So as you can see, at each zone at 12 AM, price reacts. And price either changes direction or price does basically change direction or does a reversal. So price can either tap this area here, reverse down and push through, or sometimes price will just come down here, pull down, right? And this is usually at a certain time. At 12 o'clock, price likes to run to the opposite side and then pull back down, right? So 12 a.m. starts here. So your 12 a.m. here. Price pulls down a little bit, sometimes a little bit, sometimes a little bit farther. But here, price pulled down and went to the next 12 a.m., right? Because there's a 12 a.m. here, 12 a.m. here. So you always want to mark these up using your ranges, right? So as you can see, I have a range here, right? I have another range here, another range here. So if you're using these confluences together with time, trading certain ranges, right? Later down the line, maybe next video, I'm going to tell you what these ranges are exactly. Maybe in this video, I'll hint it and tell you what the ranges are, right? But I'm telling you how I'm trading and how I'm going to see where price is going to move going into the week. So as you can see here, there's an imbalance that needs to be filled before price takes off and pushes back up for liquidity up in this area here, okay? So price will have to come and fill these imbalances here, right? Which price filled this imbalance here, tapped into it here, right? But now price has to come and fill these imbalances here before it takes off, filling. I believe this is a trading day, news trading day. What was that? The Tuesday? Yep. What was that? CPI. Yep, it was CPI. So CPI caused that drop. Okay. So price has to fill this area first before it pushes up. Because if it doesn't fill this area, there's just too much of the price has to come and grab that buy side, that buy liquidity down here. There's a lot of liquidity down here. You know, these ranges represent buy side liquidity and sell side liquidity. Now you can trade these ranges based off time confluences. I need to slow down while I'm talking. So now today is February 18th, which is Sunday. Market opens back up at 5 p.m. New York Standard Time. Eastern. Whatever the fuck. Oh, excuse my language. So 5 p.m. New York Eastern Standard Time. But you know, price is gonna move very slow because that's Tokyo session. Once price hits this 12 a.m., right? 12 a.m. opens the next day, which is Monday, opening into London. So now London, right? We're going to anticipate another 12 a.m. somewhere around this area, right? And if price reacts to a 12 a.m. here, we'll look for a retracement back into these areas here, which is our previous 12 a.m.s. And we're going to look to push down, right, to our Thursday 12 a.m. or our old, now, it wouldn't even be old Tuesday. I would say pushing it Thursdays 12 a.m., right? Or you can trade it going into our sell side liquidity and our buy side liquidity on the top of our ranges here, because there's an imbalance that needs to be filled, which is just so happens to be on our top side liquidity for this range here, right? And then we have our sell side liquidity, which is for our range here, which is our gold to gold. That's our buy side. This is our sell side liquidity. So price drops down here. We're dipping back into sell side liquidity and then going down into top range from blue to blue, top range, buy side liquidity. So price drops down, which happens to be buy side liquidity. Takes out this buy side liquidity, which happens to be 12 a.m. for our previous Thursday's range, right? We can look at previous trades. I'm trading ranges back to back. It happens every day. If you miss it, so what? Mark the ranges up, right? Hop into another trading time session, right? You have morning session. I'm trading based off London session. You have New York session. You have your 9:30 to 12 p.m. range, and you have your 10 to 11 a.m. Silver bullet. So you trade your 9:30 to 12 p.m. 9:30 a.m. to 12 p.m.'s range, right? You mark up your highs and your lows, right? And now you want to wait for your 10 to 11 silver bullet, right? So now look, you're like, okay, how do you mark up a range if the range is 9:30 to 12? Well, guess what? Mark up your previous ranges, previous time, previous confluence, see where the most likely way price is going to go, and you go based off that. If you know price is supposed to go up, where's the top side of the range going to be, and where's your silver bullet taking you? Now, if your silver bullet is trading you the opposite direction, look for reversal or pullback reversal pattern, so you can get a better entry, and then it will go into your favor. Wherever you think price is going to go, you can use these certain speaking too fast. Sorry. You can use these certain time confluences to trade certain pattern concepts. So if you know at a certain time, right, price reverses. Look, so now look, 10 to 11, right? 10 to 11. You have a reversal pattern, right? 10 to 11, you're always looking for some type of reversal, right? Now, a reversal just so happens to be at 12 a.m., okay? Inside our 9:30, right, to 12 p.m. range. I marked 9:15 because I'm just marking something up, and I hate when it doesn't line up sometimes properly when I'm trying to mark it up. So 9:30 to 12 p.m.'s range, right? Now, 10 to 11, you're looking for your silver bullet, right? Say you missed this entry, right? You missed this entry off this old Tuesday. You're like, damn, guess what? No matter what, the market is going to give you plenty of entries. Time, 10 to 11. Reversal, off the 12 a.m., right? Push. Pulled back, right? Pulled back into a fair value gap. Come on. Fair value gap. There's a fair value gap right here. Pay attention. Push down fair value gap. You got a bullish candlestick. You got two bullish candlesticks back to back, breaking through both of these bearish candlesticks. All three of these bearish candlesticks. Two candlesticks broke through. So now you're okay. Reversal pattern. 10 to 12. Now we know where price wants to go. So now you're taking this price all the way up to next 12 a.m.'s candle. So now, say you're just trading off just that price. You missed this entry, bow. Say you get in right here, right? Say you get in right here. You put your lows right here below this breaker bar, targeting 12 a.m., right? Bow. Now that's 19 pips, right? Now, watch this. Now you've got your 12 to 1:30 p.m. Range, right? But now at 12 to 1:30 p.m. range, guess what? Price starts a macro. Why am I talking like that? Oh my God. Yeah, price starts a macro at 1:30, right? Now you can target here. Now say you target it here, 18 pips, going. Now if you're trading 18 pips, that's all you need sometimes. Or you can leave your runners in and you can target the last Tuesdays 12 a.m., right? Now now we're gonna mix it up a bit. Delete this. Nope, almost knocked my mic over, right? Knocked my mic over. So now, sorry if I'm zoomed out a little bit, guys. I was just trying to get you guys to see the whole big picture. So now, right, you see this entry, 10 to 11, right? 10 to 11. Now guess what's right here? You're like, Dracor, what's this red line? What's this red dotted line? And what's this red dotted line here, right? Guess what that is? That's a previous range of liquidity. So remember, we got our sell side liquidity down here. Price came back down into sell side. Price came into sell side. Now price broke back above sell side liquidity, right? Guess what? It broke down into old buy side liquidity as well on top side of blue range here. So you have buy side liquidity getting taken out, going into Tuesdays, old Tuesdays, 12 a.m. And you have your Thursdays, 12 a.m., right? Price broke down and grabbed a ton of liquidity, right? So now you're anticipating a swing up because price is grabbing liquidity down into these ranges and it's going into buy side liquidity. You know what I'm saying? It's going into buy side liquidity and it's going into old 12 a.m. open candle ranges, right? Not open candle ranges, but open candles. So price tapped in here, right? Tapped, retraced, tap, push, retrace, push through up to 12 a.m. old, retraced, right? Now when price came back through, 2 bullish candlesticks, breaking those 3 bearish candlesticks, that's a reversal pattern, right? Because that's your reversal happening for your silver bullet, I would say, which is targeting this fair value gap. So you get it on this fair value gap, you have a pending order here, bow, pending order of this bottom range here, which is sell side liquidity, right? Tapping into blue line, can't speak. Our range here, which is our buy side liquidity, that's our sell side. Price didn't go to the sell side, price went to buy side, right? Price broke down buy side, grabbed liquidity, pushed back up. Now we get an entry. Now you have a pending order here. Pending order, you can put your stops at this low here or up here, whatever you decide. Me, usually, I'll put my stops here or about 15 pips. And me, I would target the opposite side range because I know the rest of the day, price will go to top side range because usually 12 to 1, price either at 12, price pushes up going into 1, and then usually 1:30 price reverses and starts the macro. And then later on throughout the day, 3 to 4, you have another, right? 3 to 4 here, you have another silver bullet, which is your 3 to 4 silver bullet. So I would anticipate price to, we're at a 12 a.m. here. So price can reverse, which is doing now, doing small pullbacks. I would anticipate a price push up into buy side liquidity, filling these imbalances here, creating a double top, going into some more buy side up top here, just filling up this imbalance. Now price doesn't fully run up to this imbalance, and this key zone area here, filling up this liquidity, creating that double top. Then I would anticipate a price pushing down a little bit into old buy side liquidity, right? Now price can take a little turn and dip down into this, tap this area of liquidity for 12 a.m.'s open candle, and then anticipate a push back up into these old liquidity areas here, because remember, price has to fill this liquidity zone, which happens to be old 12 a.m.'s, right? And our range here. This is sell side, this is buy side. So price wants to most likely, I don't know why I said it like that, but price will most likely want to come up and fill this area here. Now price might push up into this area and not get to buy side liquidity, but if it does, and then it happens to dip back down, right? Setting up for our Mondays 12 a.m. open, we'll see a reversal going to the downside, filling up our Thursdays 12 a.m. or going into our buy side here, seeing an anticipation push back up into CPI Tuesday, which happened here. So sorry if I jumped over a little bit. So the beginning of the week, I will anticipate a move back up into this area, filling fair value gaps and grabbing some more buy side liquidity on the top side of this range here and the top side of this red dotted range. I know the time zones that these ranges are. I'm just not going to say them, because if you watch these videos and the more I put them out and the more I do say something about certain ranges, just when I say it, write it down, because I'm not teaching, I'm just going over what I see. So I would see anticipation going up here, because on a higher time frame, this is a fair value gap, so price can tap into this fair value gap and see anticipation back up, filling this area of liquidity, because price doesn't like to leave fair value gaps when it likes to push to the opposite side. So you would see anticipation, price might drop down here into our buy side liquidity to get some momentum to the buy side up here, so we can fill this fair value gap. And then once we fill this fair value gap, now we're tapping into sell side liquidities where a lot of money is sitting for sells to go down. So we have our buy side here, which will set price up to push back up into liquidity here, filling this fair value gap, right? Most likely 9 times out of 10, if price wants to push down, it will fill up this whole fair value gap up here, because price does not like to leave any gaps at all once it pushes down to the opposite side. Because once it pushes down, it's going to create more fair value gaps for pushing back up to the upside. So we want to see price get filled all the way down, right? Once price fills up this fair value gap area here, right? And if it taps this buy side liquidity or pulls back into the zone, grabbing liquidity, and then pushes back down, we would anticipate sales going down to our, say if you have pending orders in, right? Say Tuesday, market wants to just push up here, right? And then you see price push back down, right? Bow, right? Say you put it at the top of this old 12 a.m. range, pushing all the way down to Thursday, right? This is hypothetical. Say price pushed up already, came back down into this range. Now price came down back into this range. Now you're just trading. Like you put your stop loss, 15 pips, right? 15 pip stop loss. Your target is 41 pips, right? So say this week, right? You're anticipating for the drop. Now, going based off certain ranges and certain time zones and time confluences that I'm using, silver bullets. If you don't know what a silver bullet is, just type it in on YouTube. It's a reversal, right? You can use it as another entry point, or sometimes I'm pretty sure I've seen a silver bullet reverse into just reversing more, not even reversing, it did like a pullback and then it pushed back down into the area it was going to, if I'm not mistaken. You would have to go back and look at that. And like watch more in-depth videos on it. But when I see a silver bullet, I know what's going to happen if I'm following price using my, strategy. Not my strategy, but, something I learned and I had to put it together. You know what I'm saying? So, this is profit already. We're going to race that. We're trade based off zones and targeting certain ranges and areas of liquidity, which I showed you guys. Based off this range here, which is 9:30's range to 12 p.m.'s range. You're going to look for your 10. You're going to look for your 10 on the 5-minute. Go to a 5-minute. Go on your high time frame. Look where price wants to go, right? You have your direction of price for the day. Drop down to your smaller time frame. Look for your entries and look for where price wants to go. right? You know price isn't going to push up if there's a ton of liquidity sitting down here in fair value gaps. You know price isn't going to go all the way up. It just doesn't make any sense unless there's news, and sometimes most likely news will push price down, filling liquidity, grabbing buyers, and then going to push back up because once, say 9:30 has news, right? 9:30 news, bow. Now say 10 o'clock has news, 10 o'clock, bow. Price is going to push the opposite way. Why would price push the same way twice, right? Price push down, grab liquidity, which was news. Now another news set comes out, pushes back up, right? You're like, wow, why did it do that? Because when price pushed back down, it went and it tapped in to our 12 a.m., which price pulls back and does a reversal because this is buy side liquidity. Once again, filling a fair value gap, which means price can now push to the top side of our CPI drop on Tuesday, which happened here. So now we're tapping in to this liquidity area here. So it just makes sense. So now for this week we're gonna wait and see what price wants to do at certain levels of liquidity here in certain areas. We have our times marked up, right? Now this white range here, this white range is our, what is this one? This is our 1:30 to 4 p.m.'s range. Our white range here, which I marked it vertically as well, right, is 1:30 to 4 p.m.'s range, right? 1:30 to 4 p.m.'s range. Then you're going to look for 3 to 4 p.m. silver bullet, which will be a reversal or a pullback going into opposite direction. So price was selling. So now 3 to 4, price will reverse going for buys. But there's a breaker, so price can push up here or price can push down into buy side liquidity a little bit and then shoot up. Now, if price breaks down into buy side liquidity, we will anticipate a push back up and then we're going to sell to fill, right? When price taps fair value gap, price tap, retrace, fill. Fair value gap, tap, retrace, fill. Remember that. And remember it, look at your chart, right? Look at your chart, right? I promise you. If you look at a fair value gap, look at the way it moves, study it. Look at every time stamp. Price does a retracement. Oh, rewind. Price taps it, retraces, and fills it. Fair value gap. Tap, retrace, fill. Tap, retrace, fill. Tap, retrace, fill. Tap, retrace, fill. Taps it, retraces, fill. Tap, retrace, fill. That's where the fair value gap is. You can trade off each fair value gap. Tap, retrace, fill. Tap, retrace, fill. Right? Now on smaller time frames, you see price makes a fair value gap, tap, right? Price taps it and pushes up. Now on smaller time frame, price likes to push down into a fair value gap and push up sometimes, but don't forget this is a reversal as well. But on higher time frames, right? Price, right, likes to, you see price is creating and coming back up to this area fair value gap, right? Push down, price tap into this fair value gap, retraced and filled it, and then reversed back down, right? So now price pushed up, cleared out this whole imbalance, grabbed all the sell side, that's not sell side, buy side liquidity. Price is grabbing buy side liquidity. Price pushed up into this old 12 a.m. here and created our buy side liquidity up here, which is our 1:30 to 4 p.m.'s range, right? So buy side liquidity is up here. Now we will anticipate a swing back down. This is a 30-minute into our fair value gap, right? So guess where this fair value gap is, right? Just take a guess of where this fair value gap is. Hold on. Work with me for a second. Fair value gap, 12 a.m. Now, am I making this up or am I not making this up? It just so happens that 12 a.m. is right at the fair value gap. Now, I don't know if I'm tripping, but I'm pretty sure I know where price wants to go for this week, and price wants to drop back down into liquidity, into this fair value gap area, which is the 12 a.m. for Thursday. And also, which is buy side liquidity for our range here. So we'll look for fair value gap tap into this area here, right? Price is going to fill up this area here, right? And then we're going to anticipate a swing back up, right? So this is my overview for GBP USD. And we're going to look for sells down into this fair value gap going into the 12 a.m. Thursday's candle, right? But you also want to, don't go crazy right away because you still have this 12 a.m. here. Price is going to tap this 12 a.m. here, retrace a little bit, don't get scared, and then it's going to push back down. Just let price is going to move how it wants to move, right? Price is going to tap here, retrace a little bit and push back, or it might just push down. Watch price, follow it, trust in what's going to happen, because guess what? Price will always need to come back into fair value gap. It always needs to come back into this fair value gap to grab liquidity. So don't stress if your price reverses off this 12 a.m. Just hold it. If it reverses, grab some more sell opportunities and going into this 12 a.m., which is fair value gap, which is our buy side liquidity. But it was good talking to y'all. This is our breakdown for GBP USD. We're looking for sales for the week, and thank you guys for watching, and peace out.